Bitcoin is now trading between 85k and 97k right now. Bollinger Band just hit their tightest skews since July. Volatility expansion is coming, and I am going to show you 3 ways to profit whether Bitcoin goes up or going down. Most traders will panic while there is a huge volatility. They buy high and sell low and lose money in both bull and bear market. But smart money, they love volatility because volatility creates predictable inefficiency, and that inefficiency creates profits. Today, I am going to break down 3 strategies that will work in any market situation. These are not quick rich schemes. These are the strategies with institutional win rate, and I am going to show you with data. And first, why right now is the perfect time for these strategies. Bitcoin is consolidating between 85 and 97k range for more than 2 weeks right now. The Bollinger Band gap is under $3,500, the narrowest since July 2025. And annualized volatility is dropped below 45%. This is historical low for Bitcoin. For reference, Bitcoin's average volatility is around 60 to 70%. When it comes to below 45%, it historically explodes within 2 to 4 weeks. We saw this pattern in July 2025, October 2024, and February 2024. Every time it leaded 15 to 25% in either direction. So the question isn't the Bitcoin will move, it is which direction and how do we profit from either way. Strategy 1, option straddles on CME Bitcoin futures. This is the most direct way to bet on volatility, not on direction. A straddle means you buy both a call option and a put option at the same strike price and expiration time. For an example, if Bitcoin is at 95k, you buy a February call option at 95k and a February 28 put at 95k. In these cases, if Bitcoin rallies to 110k, your call makes money. If Bitcoin crashes to 80k, your put makes money. If Bitcoin stays at 95k, in this case both expire worthless, you lose your premium. Let's use a real number from CME as of January 17, 2026 as we are recording this video. So in this case, you need to move Bitcoin at least $6,000 in either direction to make the profit. That is literally 6.3% move, and that is simply possible because of this volatility. This works when you expect big moves but don't know which direction. Perfect for a FOMC meeting, major announcements, or technical breakout or breakdown. Right now, the Bollinger Band is skews, so this is the textbook example to get into straddle setup. Even though this is a great trading method, every trading method have their own risk. Let's discuss risk here. Risk 1, volatility crash. If Bitcoin barely moves, you lose entire premium. Risk 2, time decay. Options lose every day, so this is not set and forget trade. Risk 3, capital requirements. For entering into the CME options, you need margin. Minimum is 10 to 15k. So who can use this CME options method? Moderate to aggressive investors with minimum 10k dollars capital. Best for traders with understandings of option mechanism. If you're considering in the historical perspective, the win rate is around 55% during volatility compression periods. Strategy 2, funding rate arbitrage. This is my favorite because it creates passive income regardless of Bitcoin price. These are actually perpetual futures contract with funding rates with periodic payments between longs and shorts to keep perp price close to spot. When funding rate is positive, means perps trading above spot. In this case, longs pay shorts for every 8 hours. When funding is negative, means perp is trading below spot. In this case, shorts pay longs. So how you can arbitrage on this method? Buy Bitcoin on the spot and short the same amount in perp. That's it. Your positions will cancel out the price risk. It doesn't matter whether Bitcoin goes up or going down. You just collect funding payments works as a clockworks. This is Bitcoin's funding rate across all major exchanges as of January 17, 2026. That's roughly 0.025 to 0.03% daily or 9 to 11% annually. This is not actually a life-changing trade, but it is neutral and passive. Let's discuss the risks. Risk 1, funding reversal. If rates turns negative, you start paying instead of earning. Risk 2, extreme volatility. In extreme moves like 30% up or down, in this case, the low leverage itself may you liquidated. Risk 3, exchange risk. You are trusting a centralized exchange with your capital if you are not using a decentralized one. So how to mitigate this risk? Use only 1 to 2x leverage, never 5x or higher. Set stop loss 15 to 20% from entry to prevent liquidation. Monitor funding rate daily. You should need to exit before the funding rate goes below 0.01. Split capital across 2 to 3 exchanges to reduce the platform risk. So who can use this trading mechanism? Conservative to moderate investors wanting passive income. It requires at least $10K worth of capital for meaningful return. The win rate is more than 80%. This is one of the most probable trading strategy when you executed very clearly with proper monitoring. And this is best during bull market where the funding is always positive. Strategies 3. The range trading. This is the simplest of all 3 trades we are discussing, but it requires patience and discipline. So what is range trading? When Bitcoin consolidates in a tighter range, it bounces between support and resistance levels like a ping pong ball. In the case of word, the strategy is simple. You buy near support and sell near resistance. That's it. It's not actually a sexy trading strategy, but it is super effective in the case of sideways market. If you are looking into the current setup, Bitcoin is currently in a range right now. You can see 87K support and 97K resistance. That's a 10K range, roughly 11% from bottom to top. The interesting factor you need to consider is that the perfect execution is not exist. Most of the trade you are trading in the range trade will be messier or more realistic way, like 1.5 to 2 round trips per month, like 6 to 8% per trip, that is 9 to 16% monthly. So you need a strategies like that as I described. The main thing you need to look is that range never exists for a long time. It will break sometime. If it had a breakout like above 97K, exit all short positions and ride the momentum with the rest of your positions or do nothing. In the case of breakdown like below 87K, cut losses at stop loss and just wait for the new ranges to form. And you need to keep in mind that range won't exist for longer. You need to ready for the breakout or breakdown. Let's discuss risks. Risk 1, false breakout. Bitcoin spikes to 98K, then crashes back. In this point, you sold too early. Risk 2, range breakdown. When Bitcoin crashes from 87 to 80K, but still you are holding your bags. That also a risk. Risk 3, opportunity cost. While you are doing the range trades, Bitcoin may be going up. In this case, you are missing the rally. So who can actually use this range trading? Conservative to moderate traders with any capital, whether it's a 1K or 100K, doesn't matter. And this is best for patient, disciplined trader who can resist FOMO. And win rate is 60 to 70% and it is more profitable at the time of extended consolidation. And it works in both bear and bull market. Just trade the range you already in. That's it. So we covered the 3 strategies. Let's compare them. You can see the table right now. Just take a pause and look into the table very carefully to get better understandings on these 3 trading strategies and how to use them. So now let's discuss how to decide which trade you need to enter, whether it is options straddle or range trading or funding rate arbitrage. If you expect volatility strikes, you need to use options straddle strategy. If you want passive income in the bull market, funding rate arbitrage is best. If Bitcoin is range bound and you are patient, in that case the range trading is best. If you are more risk aware, avoid options straddle, just only use funding arbitrage or range trading. That's it. If you only have less than 10K capital, then you can only use range trading. Can you combine them? Yes, advanced traders run all 3 simultaneously. Look at the portfolio allocation example, then you will get a better understanding. This diversify your strategy risk. If one fails, other will compensate. Alright, final thought before you're going to execute any trades. Volatility is the opportunity, not actually a danger. This works in both bull market and bear market. You should need to start small, like 10 to 20% of your capital at the start before going fully. Track your trade, like keep your journal for every trade you're making. Risk management is more greater than the profit making. Preserve the capital first, then try to get the profits. None of these are risk-free. You can lose money in any of them. Options can expire worthless, funding can reverse, range can break. Never trade with the money you can't afford to lose. If you want more this type of institutional trading strategies, not hype driven, just data and execution plan, then this channel is for you. Hit subscribe button right now for this type of breakdown, macro analysis and positioning frameworks. And remember, the goal is not to predict Bitcoin's move, it is to profit regardless of whether it is going down or up. This is how professionals trade. See you in the next one.